Welcome to Galaxy Brains.
An infinite amount of cash.
I'm your host, Alex Thorn.
The U.S. banking system is sound and resilient.
Bitcoin made a new all-time high.
If you're not long, you're short.
Satoshi's going to come on there, laugh hysterically, go quiet. All Bitcoin's going to be erased.
Bitcoin's the best crypto asset.
Bitcoin is going to zero.
Welcome back to Galaxy Brains. As always, I'm your host, Alex Thorn, head of firm-wide research at Galaxy. We have a great episode for you today. Paul Giordano, VP of Asset Management at MARA, previously known as Marathon Digital, the world's largest publicly traded Bitcoin miner. He's our guest, and with Paul, I'm going to talk about Bitcoin mining's future, the potential impact of tariffs and other things on hash rate growth in the United States, Marathon's capital market strategy. They've been in the market buying Bitcoin for their treasury, and a bunch of interesting Bitcoin native topics like L2s, Ordinals, runes, out-of-band payments, and Bitcoin upgrades. BIMNet is off this week. Before I get to the show, I need to remind you to please refer to the link to the disclaimer in the podcast notes, and note that none of the information in this podcast constitutes investment advice or an offer, recommendation, or solicitation by Galaxy or any of its affiliates to buy or sell any securities. Let's hop right into the show. All right, like I said, BIMNet, a BB from Galaxy Trading, is off this week, but I thought I would just say a few words to take stock of the monumental year that Bitcoin and digital assets had. Truly incredible year. Started the year in the sort of $30,000 to $40,000 range. As I say this, on December 23rd, Bitcoin is trading almost triple that at $94,000. We got as high as $108,000. Yes, in the past few weeks, Bitcoin has crashed to the $90,000 area. I just have to say that out loud. It's been truly a wild ride for a decade in Bitcoin for me. And the idea that we're crashing into the mid $90,000 range, it's almost surreal to even say. Wow, a lot has happened. I would say, to me, the year is marked primarily by two events: the launch of the Bitcoin ETFs in January, and then former President Trump's re-election in November, which has been a huge uplift for Bitcoin and digital asset markets, given how positive he and his campaign were about Bitcoin and digital assets. And then as we've seen the named personnel to be nominated to various crucial economic and financial regulatory roles, those names come out, many of them very positive, very positive. Scott Bessent, Key Square Group, hedge fund guy, but has said that crypto is about freedom, praised the fact that it's getting young people interested in capital markets again. Paul Atkins named as the SEC chair nominee, very, very pro Bitcoin and digital assets. Chairman and CEO of Potomac Group, a consultant that many in the financial world rely on for work, including many in the digital assets industry. David Sachs named as the crypto and AI czar, a longtime Bitcoin and crypto VC, also involved in a bunch of other interesting stuff. Howard Lutnick, right, named as Commerce Secretary. So all these folks, let alone Elon Musk and Vivek Ramaswamy, in charge of this new Department of Government Efficiency, the DOGE, now a formalized sort of advisory group to the White House. Both of them, own and have praised Bitcoin and digital assets. So all of that, those two events, the ETFs and the Trump re-election, obviously, I think marked the year. Bitcoin actually traded up huge to a new all-time high following the launch of the ETFs and reached a new all-time high in March of 2024. Then it traded down and sideways for 237 days until the morning after the election on November 6th. When it again made new all-time highs, and of course it's ripped since then. So a lot of interesting stuff happened though in crypto, but I would say in the market, those are the two defining moments. The Bitcoin ETFs have taken in more than 36 billion in net inflows. In terms of total AUM, they're at $109 billion at the end of this year. They're only 19% away from flipping the combined AUM of all gold ETPs. So truly an incredible run, the best launch of an ETF category in history. Lots of institutional investors, all of that stuff that we've talked about that about. I think other interesting areas have certainly been the rise of stablecoins, new all-time highs in circulating supply in stablecoins. Resiliency of DeFi has been impressive, continues to impress. We're watching the launch and maturation of L2s, both on Ethereum, but also hopefully potentially on Bitcoin in 2025. Companies launching their own L2s, not just the Coinbases of the world, but also was reported Deutsche Bank planning to launch an Ethereum, a roll-up that rolls up to Ethereum. An enormous amount of interesting stuff happening in crypto this year that I think will mark 24 as a real launch pad for the future. We have a lot to be excited about in 2025, not the least of which is the expected relaxation and reevaluation of digital asset regulatory policy in America, which could serve as a major catalyst, not just supportive of asset prices, but of innovation. The possibility, perhaps, that public blockchains may actually integrate in some way with traditional finance, I think, has a lot of people excited. And who knows? It's been a wild ride. Thank you to everyone for listening this year. We've had a great year on Galaxy Brains. Thank you to my friends Phineas and Chris and Will from Studio Friends and the team at Galaxy Marketing for making this show possible. And thank you, everyone, for joining us. We have a great interview coming up with Paul Giordano, VP of Asset Management at MARA, the world's largest Bitcoin miner. We have a bunch of great topics. So let's hop right into it with Paul. Let's go now to our guest, Paul Giordano, VP of Asset Management at MARA, formerly known as Marathon Digital, the largest public miner. Paul, thank you so much for coming on Galaxy Brains.
Thank you for having me, Alex. It's wonderful to be here.
Truly exciting time in Bitcoin world and in the world of digital assets. Not just the launch of the Bitcoin ETFs, which were the most performant launch in the history of ETFs and caused a huge uplift at the beginning of the year, but obviously the re-election of former President Donald Trump and all of his positive statements around Bitcoin and Bitcoin mining. I don't know, what's your sense here? We're recording on December 23rd, right before Christmas and the end of the year. What's your sort of vibe of where we are and help us take stock of this moment?
Well, the first thing that pops into my head is that whatever happens in the next 4 years will be less hostile to Bitcoin than the previous 4 years. So, there's positive momentum from the regulatory front. We definitely want some clarity on a number of issues that I think we're going to get. We got people coming into this next administration on the regulatory side who are advocates for Bitcoin and crypto more broadly. And I think we've got a lot of positive momentum from that front, because it's a lot easier to run a business, even under the strictest of regulations, than it is to run a business without regulations and worrying about getting a Wells notice at any time, So I think, there's definitely going to be, positive momentum going forward from the regulatory side. There's positive momentum from the financial side. As you mentioned, the ETFs have been an unbelievable success. I mean, in 9 months, we've almost eclipsed the gold ETF, which took over almost 20 years. So, I mean, all of those flows are pointed to stronger prices for Bitcoin, a supportive environment on any downdraft or drawdown, and we're very excited of where we're headed. But for us, Bitcoin is a means to an end, not just necessarily. We're not in business just to mine Bitcoin, although we obviously do that. We're the largest public miner. We just eclipsed 45,000 Bitcoin in our treasury. But Bitcoin is a way to learn about ancillary services that we can provide to hyperscalers, to the grid, to the Bitcoin network in general. So that's the way that we see the business.
Yeah, it is an exciting time. And you mentioned that gold ETF versus Bitcoin ETF. I think it just produced a chart about this morning. The combined Bitcoin ETPs in the U.S. are only 24 billion or 19% from eclipsing the combined gold ETPs in the U.S. It's actually just a crazy chart. It's an insane chart.
It's pretty incredible. And, yeah, I know. And it's also, the sixth largest asset by market cap as well. To me, people are finding use cases either as an inflation hedge or a treasury tool or, something else in the case of, the usage of the blockchain for real world tokens or other types of upgrades. There's a lot going on the Bitcoin side, and we're very happy to be positioned where we are.
Yeah, we'll get into some of those things going on. I wanted to ask, you mentioned providing ancillary services. You said hyperscalers. Like, I've seen some Bitcoin mining firms, which are by definition operate massive data centers, have access to enormous amounts of electricity. There is a new industry that is relatively new industry that also demands a large amount of electricity, and that's high performance compute, artificial intelligence. I've seen some miners announce or enter into agreements with these firms that provide data centers for those use cases. How is MARA thinking about that?
Yeah, well, I mean, we look at the stack from ASICs design to cloud integration all the way, to the tech stack to help, the hyperscalers. So we're building the tools that allow them to position themselves better. But the drain on the grid from AI is going to be significant. I mean, uses 10 times more electricity to do a Chat GPT search than it does to do a Google search, and that's where we're headed. But the problem is that the hyperscalers are demanding electricity in a spiked measure. They need 5 nines availability all the time, but they're not using all of that electricity and all of that capacity. So where we can deploy, we can bring our mining equipment, which are very modular, to the source of the energy, and we can help stabilize that demand and be the buyer of electricity when it's not being needed by the grid. We can shut off 100 megawatts of electricity in 2 to 5 minutes. So, and give that electricity back to the grid when they need it for hyperscalers or just from weather-related demand. So, we're helping, these big grids, as well as, a lot of this hyperscaler demand is moving to the edge of the internet. It seems like the entire internet is moving to the edge. And it's very difficult to tap the grid from the edge, but we can, deploy some of our equipment to help reduce the cost for the hyperscalers in building out their electricity demand.
Yeah, very interesting. The fact that for years this sort of fringe niche Bitcoin industry was the one building out all this power supply, and now there's this other new trend of an industry that's demanding of it. I hear a lot about the sort of crypto and AI overlap, right? In sort of crypto world, you've got these AI agents launching meme coins. You've got, I know, people trading with AI. People have talked about timestamping and proving the provenance of data that may be deep faked or fake created by AI. But really this like underlying infrastructure layer of Bitcoin mining, perhaps serving as the data center and electrical foundation for AI, that seems like it's guaranteed to happen.
I agree with you. And I mean, it's happening, and not just for hyperscalers and for AI, it's also happening for sovereigns around the world. I mean, in Austria and Germany, they're about 65% renewable energy, and they need to be able to find a load stabilizer, which Bitcoin mining can produce. I mean, additionally, countries are going to need to figure out a way to hedge their dollar reserves. And it'll probably be Bitcoin, the sooner the better for me, but, it'll happen eventually down the road because they're going to need access to the Bitcoin network for transactions. So the only way that they can get in is by mining Bitcoin themselves. So there's a lot of use cases that are growing out of the stabilizing effect of curtailment from Bitcoin miners.
Yeah, it's super interesting. I think you're going to see that. You're starting to see it, as you said. All right, let's pivot a little bit. Let's talk about, you mentioned the amount of Bitcoin that MARA holds in its treasury. I've seen in the news that it's been reported that MARA has been acquiring Bitcoin on the open market. Can you talk a little bit about the strategy there, the capital markets activity, and what the long-term goals are for MARA in doing that?
Yeah, of course. So, there are three things that that we need to solve for as a technology company. And those are sort of what we call the 3 C's, which are compute, capital, and capacity. So, how do we look at raising capital to do, these types of endeavors? And, the convertible bond market has been very responsive to our offerings. We have a lot of volatility in our underlying equity, which convertible bond investors really like. So we feel like that's the cheapest way for us to build out the capital piece of our three C's. Also we look at the time lag between raising capital, buying miners, deploying the miners, and we felt like there was an opportunity to use capital to immediately buy Bitcoin because of near-term catalysts, rather than, although it's cheaper over time to mine Bitcoin than it is to buy in the market, there's a timing aspect. So we're balancing all of those opportunities to try to enhance shareholder value the best way we can.
Yeah, that makes a lot of sense. I think the timing, the lead time on ASICs, how long is the lead time? If you guys wake up tomorrow and say, we want to purchase, 1,000 ASICs, like, brand new ones from a manufacturer, how long until you get those typically, historically?
It's a number of months. I don't know exactly, and it really depends on, the capacity that the manufacturer has and shipping, and also there's fears of tariffs going forward and how we're going to navigate that new environment. But we don't know it until we see it. So it really depends on the type of ASICs that you want to purchase and the lead time for delivery, and weigh that against what you think Bitcoin will do over that next period of time. We've done very well in these purchases. Bitcoin has had quite a run in the fourth quarter of this year, and that's when we did most of our capital markets work. So we're very happy that we were able to return shareholder value in the very near term, based on the buys that we made in the fourth quarter.
Does the Bitcoin mining industry in the United States have to worry about tariffs? Or, I think we already have some tariffs on, for example, China, but is that, how are you guys thinking about that from a sort of political trade risk?
It depends on the extent of the tariffs. We do have tariffs, and they've been there for a while, and we've navigated our purchases around that. But there's really a large unknown going forward. So we're just going to take that data as it comes in, and decide what's our best use of shareholder capital. Is it going straight to the Bitcoin spot market, or is it to deploy more machines?
Yeah, it's interesting because tariffs in general, like many types of corporate taxes, are likely to get, the cost of them is likely to get pushed down to consumers. If you buy a good that's made abroad at a store in the United States, right, the good may go up in price as the manufacturer and the supplier distributor has to pay more to import it. But that's not, if you're buying machines to create commodities like Bitcoin, right, you can't demand a higher price from Bitcoin. So I could see, we don't have a lot of clarity, to be clear. I know well, and
for sure,
our audience should know. We really have no idea exactly what may or may not happen on this spot, but it's interesting, domestic commodity producers that require foreign made and manufactured devices, whether it's literally a uranium mine or any other type of mine that needs that's an interesting one where the price elasticity can't be, sucked back from the consumer in the same way.
Yeah, you're absolutely right, and the secondary market for machines is not what it is in other things too. So there's not you can't substitute an older machine at a much lower price in the secondary market than you could necessarily in the newer. If you want to maintain your global hash rate percentage, you need to be competitive, and you need to grow with the best equipment. We do have a couple of initiatives where, for example, we just bought a wind farm, and that is almost near zero cost electricity, and we can deploy less efficient machines there, and still be at a positive revenue capacity. So it really depends on where we're buying the electricity. The goal is to push for zero cost electricity, and basically to capture any electrons that are floating out there that are not being used by the grid or any of the other demand drivers of electricity.
Yeah, I think that makes sense. I think it's just an interesting industry. There's a lot up in the air for what could happen. Do you guys have any stated long-term hash rate either projection for the network or for MARA, or your goals for growing or maintaining hash rate? Like, how do you think about that?
Yeah, well, we have not announced any goals going forward, but we did double our hash rate capacity in the past year. We're at 50 exahash now. I know that we will want to grow. We'll make a public statement when we're ready to do that. There are a lot of moving pieces, as you mentioned. Manufacturing and capacity for capital and compute power. So we'll put that all together, and when we're ready to come up with a new goal, we'll make it available to the market.
I wanted to ask you, Paul, about some of the sort of a little bit more Bitcoin native topics. I think one maybe we'll stick with, which is very close to you guys, is out of band transactions. In February of this year, so gosh, almost a year ago, MARA announced Slipstream, which is a service to provide direct inclusion, block inclusion for transactions through your blocks. Can you tell us what Slipstream is first before I dig into this a little?
Yeah, for sure. So one thing, there is a misnomer out there that we operate the largest pool for Bitcoin mining. That's not actually accurate, because it's not a pool because it's just us. We don't allow anybody else to join our pool. We wanted to have our own pool, for a lot of reasons. It's for a regulatory point of view, we can isolate our transactions. Our auditors love that. That makes life a lot easier. We don't want to be an aggregator of hash rate. But we want to give someone the ability, if they have a unique transaction, to get on the blockchain, because if you're doing a transaction or an ordinal or runes with thousands of endpoints, you have to make sure that all of them get on the blockchain. So with us, it's a reservation system where you can make sure you get block space. And our goal is to increase fees from Bitcoin mining. And we're going to need to be creative and come up with these ancillary services, Slipstream being one of them, that's been quite popular, over the past, since February when we launched it.
Yeah, I think there's definitely going to be more of these types of transactions, strange, irregular, or just urgent, perhaps, is another way of thinking about it, or needing some guarantee as to when finality could occur.
Yes,
and
Bitcoin, and the network is the safest computer network in the world. So the more and more people, the more important those transactions are. They're going to move away from some of the other networks and are really going to focus on the Bitcoin network.
And do you think there's like any kind of long-term either detriment or opportunity, positive or negative, for what I'm calling out-of-band transactions, right? These transactions are being delivered to MARA for inclusion in a block. They're not being broadcast to the public mempool. Does that have any negative risk, or is it good, inevitable? What is it?
I don't think there's any negative risk, but I mean, there are people that are paying 3 to 4 Bitcoin to make sure that they can inscribe something on a block, and someone inscribed a rap song on a block just to show that they could, but they paid excess fees to do that. And, to us, which was, a very nice revenue enhancement. So I don't see any major negatives to the growth in sort of these off-chain transactions getting onto the blockchain. I think it's going to make life a lot easier for people who are doing complex things in Bitcoin.
Some of those complex things, I think, will actually, before I get into this, to the broader question, I would stick with runes and inscriptions, which you mentioned. Are you guys agnostic to this type of activity? I know there's some people in the mining community, I would say a small but vocal minority, that are opposed to ordinals. And there are, of course, people across the Bitcoin community in general who are opposed to this sort of use of Bitcoin as an arbitrary data store. Do you guys take a position on this one way or another?
Well, there's going to be the purists out there that, the Bitcoin maxis that want Bitcoin to be used as a store of value, and that's it. And that's fine. I mean, the entire network has grown up with that type of attitude, and we like the fact that people feel that way. But, we're trying to be a little bit more creative in how the Bitcoin network is used. For example, we launched an initiative called Enduro earlier this year, which is a real world asset tokenization platform. And we did our first tokenization, which is going very well. It's whiskey barrels that you can buy a token for that represents one barrel of whiskey that is in its aging process. And it allows people, who are early investors in this limited partnership, liquidity access in and out. And it gives the producer another avenue for raising capital. So that's been very, very popular. There are going to be others that are going to be, even more popular going out there. And I think, to me, that it's not really necessarily a Bitcoin centric plan, but the more use cases in the crypto world bring legitimacy. And I think that's a positive for everyone.
So this is a Bitcoin L2 that ultimately settles on Bitcoin, where you can tokenize things on the L2?
That's exactly right. Yeah. We think that people are going to want to be on the world's safest network. We think it can compete with the Ethereum virtual machine. And, we've seen some good access and success already.
Yeah, very interesting. I think there are a lot of Bitcoin L2s in development. We've written about these extensively at Galaxy. Many that are sort of, I would say, layered in name only, that they even may have launched on Ethereum, but they sort of claim. I joke that L2s are kind of just other blockchains that pledge fealty to a primary blockchain, because
sure, it's a good way to look at it. There are so many different
types. Yeah, some of them have more direct alignment than others, right? Like if you're a roll up and you post your proofs to the parent blockchain. But I mean, do you think that are you bullish long term on this category of L2s as a way to bring expressivity to Bitcoin?
I am, yeah. I think I think every limited partnership is at risk of being converted into an RWA. It makes just too much sense. You've got the visibility into asset valuations over the lifetime of an investment, and plus an on and off ramp, if need be, by that initial investor. So I think it's a fantastic future, and if the more business we bring to the Bitcoin blockchain, the better off it is for the mining community and the overall Bitcoin holders.
Mm-hmm. Do you have any thoughts on the Bitcoin strategic reserve that has been discussed? I know it's okay if not. I know people are there's sort of, I think, some vocal feelings on both sides of this debate, and also a pretty large. I mean, I would count myself as a somewhat ambivalent middle.
Not to be redundant, of course, right? I've been reading prediction markets that say 60% chance of a 1 million Bitcoin strategic reserve. It's one of those things that anyone who owns Bitcoin would love to see, because it will definitely drive prices higher. And I've seen some state legislatures putting out calls for having Bitcoin in their reserve. I think it's one of those things that once there's a tipping point, then most sovereigns are going to need to own some Bitcoin just to stay competitive. So I think there's a high chance that it will work. I think it's just another reason to feel comfortable being long Bitcoin. And it's an asset that is new. It's kind of like finding a new precious metal mine. It makes sense to bring it into the country's treasury and diversify its asset risk that way. We have a lot of assets in the government, gold assets, strategic oil reserves. Having a strategic Bitcoin reserve, I think, would fill out that portfolio nicely.
Yeah, I think there's some different ways that it makes sense, and I think some others that people find very risky. But it is, to me, I think of it pretty straightforward. I mean, Bitcoin's historical performance is additive to a portfolio of effectively any size. It doesn't matter. I was just looking today, the top three, looking at like major equities and fixed income securities and indices and commodities year to date as of December 20th, which was, last close of trading on Friday. In order, the best Sharpe ratio is MicroStrategy, NVIDIA, and then Bitcoin. So, and obviously the first of those is a self-described Bitcoin treasury company. So, it makes sense to me, like, especially if you have if you're a foreign nation that either has your own currency or you're pegged to the dollar, but you have a sovereign wealth fund or you need to hedge your dollar exposure. I think the way a U.S. I like that you mentioned the Strategic Petroleum Reserve, because this seems like a more, sort of less risky and more in line with American style for something like this than say doing it at the Treasury or at the Fed. But I don't know. It's interesting.
Yeah, I think it's interesting, and I think it sits better at the Treasury than it does at the Fed. I know that the Fed chairman last week said that he doesn't see the legality behind Bitcoin as a Fed asset, which I'm totally comfortable with because I think it's a Treasury asset. The Strategic Oil Reserve is managed by the Department of Energy. It's not managed by the Fed. A Bitcoin strategic reserve being managed by the Treasury is where it should sit. And I've not seen any news reports saying that that's not legally available to us.
Yeah, I think that was a pretty diplomatic answer from Jay Powell too. The question was actually what he thought about whether the U.S. government should hold Bitcoin, and his answer was that the Fed doesn't have the statutory authority to, so he'll leave that up to Congress. And I thought that was actually quite diplomatic, quite kind.
His job is busy enough already. He doesn't need something else to worry about.
Yeah, can you imagine if he weighs into that debate, like just how he knows Bitcoiners well enough, right? This guy's not he's a plugged in guy. He knows he would unleash a wave of commentary and criticism that's not productive for the Fed's mandate if he said that. Look, Paul, before we go, we talked about Bitcoin L2s, we talked about runes and ordinals a little bit, but broadly, I know there's some momentum, I would say, it's not overwhelming yet, but some momentum building for another Bitcoin upgrade. The last in sort of an order going backwards, we had Taproot and Schnorr signatures added to Bitcoin in 2021. And then in 2017, 4 years before that, was when SegWit was added to Bitcoin. That sort of right at the time when the block size wars are sort of seen to have concluded. It's been about another 4 years as we enter 2025, and there's some interesting proposals that, in my view, are quite moderate and yet they're low risk, but perhaps high value, but not so much that you might have a view, or if you do, please share. But if you have a view on any of these proposals, many of them related to covenants, could improve the quality of L2 settlement and bridging and stuff like that. But also just how does Marathon think about the Bitcoin protocol or any advocacy around, whether it should or when it should upgrade? This has been a big issue in the Bitcoin community over, it's decades now, with businesses having very strong views. Some do now, but and some did then. I don't know what your thoughts are from MARA on this.
Yeah, well, we don't have a public opinion of exactly how we feel about this topic. Any kind of upgrade that increases efficiency is a positive, but anything new is also very scary. And Bitcoin has performed very well. It's done what it's supposed to do. It's been safe. It's not been hacked or attacked. So for me personally, to get behind any kind of upgrade, it would need to be a significant efficiency and safety upgrade. That would get me interested. Doing any kind of system upgrade or protocol upgrade to make it easier for L2s or like something like our Slipstream network. I don't know if that's really necessary and worth the risk of something going wrong. But that's just my opinion.
Yeah, I think it's reasonable. It's always kind of reasonable to let's wait and see and be conservative and evaluate when it comes to Bitcoin.
Well put.
Yeah, there's a lot of money at stake and a 15-year track record to protect. So I get that. Well, this has been great, Paul. Congratulations on the great year. And Paul Giordano, VP of Asset Management at MARA, thank you so much for coming on Galaxy Brains.
Thank you, Alex. I enjoyed it.
That's it for this week's episode of Galaxy Brains. Thanks to our guest, Paul Giordano, VP of Asset Management at MARA, formerly known as Marathon Digital. BIMNet again was off this week, and we're going to take next week off ourselves, so we will catch you the beginning of January. Everyone have a safe and happy New Year's. Enjoy yourself, your families, and your friends. We will see you in 2025. Thanks for listening to Galaxy Brains, the weekly podcast from Galaxy Research. If you enjoy the show, please like, rate, review, and subscribe wherever you get your podcasts. To follow Galaxy Research, sign up for our weekly newsletter at gdr.email, read our content at galaxy.com/research, and follow us on Twitter at GLXY Research. See you next week.